The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. How's everyone doing today? Turnaround Tuesday. So the crude is approaching the broadening formation top up here. So we're about a half a buck away, approaching it. There is a little bit of a divergence here. I'd rather see a pullback and then one more shot up towards maybe a little bit under the big round number of 60 to complete this wave. As you can tell, 4 hour. Still pretty good momentum. So I may trade the line regardless of NFA, RSI, excuse me. But when I do it, I'll piece in. So trading lesson is piece in, piece out, probe and protect. So you probe and you have a little market going your way a little bit, then you book part of it and you tighten up your stops to BE. So not quite there. Of course, I think that there's going to be maybe even the same day when crude tops, we'll finally get some type of top in the indices. They've been trading together, from this low in the crude. We've had the blow off in stocks as well. S&P's up at this 2846 level. As you can tell on the 4 hour, it's almost a confirmed high. And on the 1 hour, still pretty good divergence going back to here. But again, kind of like the crude, a little bit overbought, doesn't seem done yet. Have an idea there's a possibility that the peak in both of these instruments may happen on the Fed. Maybe the Fed gives the market what it wants and they come out with a dovish statement and we complete something up there. But I think a lot of it is dependent upon what happens with energy, because energy stocks have been, besides tech, a pretty good part of this rally. Looking at the yen is trying to hold here. Been negative this thing since the BOJ. And, we've had a continuation move to the downside, trying to dig in its heels at 1120 or so. To me, as long as we're back, stay under 1140, 1150, looking for a continuation move back towards major support, which comes in with a moving average of 200 day on the 4 hour. The 200 comes in right there at this previous low around 1080, 111. And how I come up with 140 is basically if this is a descending triangle, and I know I'm getting ahead of myself, that's what I do. Looking ahead, under 1080, you take 140 pips from the high at 1220 to 180, gives you 940. So that's my target for the yen, and then perhaps the long-term uptrend in U.S. dollar yen begins to reassert itself. That's what I see there. Dollar is pretty unclear to me. I'm going to give it the benefit of the doubt as long as we hold 95.80. And as you can tell, we're right against some important moving averages. So if the dollar is going to fail, it's going to take out 95.80. And then who knows where the bottom is. Should be at least a move to 94 or lower. So that's my view on the currencies. Having a pretty good day in the gold, in the metals, with the dollar weakening. So for the bears that are selling rallies in the metals, also great call. Want to tip my hat to Steve Volge. This bull flag in copper is manifesting here. We're on the verge of a breakout, and I think Steve was talking about $3, 310, something like that, maybe $3. So that looks like it's in gear. And the line that I showed you in the gold, we're testing it. In fact, we're right there. So we'll see what happens here. Maybe we still end up getting more upside into maybe 1320, which would be 61.8 of the $65 decline from the highs at 1345. And taking a look at bonds, they're trying yields or trying to dig in here. I looked at DSI and bonds are way up there, I think 80% about. So we'll see. The bonds are trying a major breakdown here, but perhaps they dig in their heels here at a higher low. Remember, the Fed is tomorrow. So really, I would try not to initiate major positions in front of the Fed. You know, it's kind of like an NFP or any other central bank or major red event. Unless you have a lead and you could trail stops, I would rather react to what the Fed does. And uh, if I miss something, okay, what's new about that? So I miss things every day. I'd rather miss a trade than play black or red roulette on a binary outcome in these markets. So looking to react to the Fed, I think there'll be some real good opportunities after the Fed. And if not, you just wait for things to reset. So into these big red events, I recommend prudence over valor. Don't try and be a hero. I've done it, and Sir Galahad can fall off his horse trying to do that. So, as conservative as you can be in a highly speculative endeavor, there are times where sometimes the right trade is no trade, and I think the Fed is one event that I'm going to have. I usually have either nothing on or pared down positions into a major event like that, and so tomorrow could be a pretty big day in a lot of these markets. It's also the beginning of spring tomorrow, so. Yeah, and if you look into the sky, you'll see, a white ball that's going to be pretty full. So we'll see what kind of turning points, maybe turn around Tuesday because of the event, the change of seasons, and the Fed is going to be turnaround Tuesday, might be turnaround Wednesday. So we'll see. I'm going to become a spectator rather than a speculator. Perhaps the only position I'll hold, since I have a decent lead from last week, would be short positions in U.S. dollar yen. And that's it. So one other thing, Bitcoin's threatening to break out. We'll see if they could turn it back one more time. It's starting to even act better than Ethereum and Litecoin right here. So uh, Litecoin has really the best weekly. I'll just give you a quick review of all the cryptos here where I turn it over to Blake. I want to remind everyone to give Trent and Justin a call at Forest Park FX so that you're getting rebates or paying for uh, your subscription here. So here's a Bitcoin threatening breakout on a shorter term, back over this 37. Maybe this is just consolidation here. But when you look at the weekly charts, and I'm going to ask Steve for the name of that broker. Here's Bitcoin. Here's Ethereum. Not much better, but here's Litecoin. So when you look at the three, which one has the most relative strength? Any guesses out there? Maybe you're not crypto. Oh, hi, Michael. Okay, so we have Michael here today. Michael's going to be our interview at the top of the hour. Really looking forward to talking to Michael. He'll he really shares his trading journey with his followers. He's a big believer in he shares his journal and things he learns along the way. So that is a habit I think everyone should get into, having a journal. And NLP specialists will say that you remember things that are written down more than something that you just see visually. So journal definitely does that for you. And I want to thank everyone who's been supporting us as a member, and recommend that if you're new and this is your first time in FACE, that you investigate our team and try and find more experience. 14 decades of market experience. So I'm 12 of them. So I'm 120. But yeah, there's 140 years of experience here. on this team. And it's not just time that's important. You could be doing something forever and still stink, but a lot of talent, good minds, and humble people willing to help you out. And well over 100 people in our private members chat that are going to help you out after phase all day long. Want to remind people that really to get an edge on what's happening here in phase, as a member, you're going to hear Paul every morning as he gets up in Texas at 1 in the morning to serve our European and Asian clients in the European crossover. And an excellent trader who's kind of the chief moderator in our chat room, Amanda Sweeney, is really a top gun. So she shares all of her live trades in there, and you can learn a lot from Amanda. So Blake, how are you today? And are you
I'm
kind of
good. I'm
hands in
good.
pocket? Hands in pocket? Huh?
Yeah. I've got some dollar Canadian long, which is working down towards the big figure as the crude oil market continues to move. We're closing in on $60 on crude.
Yeah.
Yeah, I mean, this is so crude, is you were talking about crude oil continuing higher. We're actually at the 100 and almost
Already.
161% extension here in
Yeah.
crude oil. Let me show you guys what
Okay.
crude looks like.
Yeah, I want to short it up here between here and 60. I just need some. Okay, so there's some more confluence. You have 1.618 up there. Okay.
Yeah, and then also a 50% retracement of the big
Wow.
move down, and it all comes in right around $60. So, you know, um, and relative strength is overbought, divergent,
You're
but
right.
at the same time, as you mentioned, stocks are stronger,
Yeah.
and while equity markets are stronger, and this is it's keeping crude oil really well supported at this point too. So unless we see what you would say is turnaround Tuesday, until that really manifests, right now, I mean, crude oil remains well bid, and it's like I said, it's divergent. It's making a push, but do you really want to stand in front of it right at this moment in time? It's a bit of a risk, with risk appetite as strong as it is.
I'd like to see one more divergence, Blake, and a pullback and then one more high. And I prefer for top picking the RSI making new with the market making new highs. The better shorts are when the RSI cannot make it above 70, over 70 here.
Yeah, which we're currently well in this 4 hour anyway. It's a 4 hour
Yeah.
chart, I guess. If you look at a daily, we are at 70, and we're not divergent on the daily charts.
Right.
So I mean, as of right now, crude continues to blast higher, and I don't know if you really want to stand in the way just yet, but let's see if we can get like a push up into 60 or maybe 59. 60 is, I mean, these are the levels of resistance that are going to matter as we make our way up here. So and that's what crude's doing. So as long as crude does that, the dollar Canadian stays subdued, and we're approaching, like, a lot of horizontal support. There's a little trend line support here for consolidating. So I'm just kind of sitting here hoping that crude tops out here soon. But like I said, with S&P is just continuing to climb higher. And by the way, we are at the 127% extension of the only, like, we had a 1 week sell off. I think, what was that, March 1st?
Yeah.
Through March 8th. And that little 1 week sell off coming out of the wedge, we're at, we broke out, and then we're at the 127% extension. Now,
it took a week to get down there, Blake, and pretty much 1 day to take it all back. Last Monday. Yeah.
Yeah, it's nuts. I mean, the market just continues to grind higher, and we are. By the way, we are in breakout territory. I mean, we're not really expanding on this move greatly, but it's taking out anybody who was short, getting everybody long, and the question is, do we react here, or do we just continue to grind higher? As the market looks at Brexit, looks at the China-U.S. trade negotiations. No one's selling. Everybody's still optimistic that good things are going to happen. So I don't know if there's any reason really to be short risk at this point, but we are challenging some resistance, and we might end up finding some resistance somewhere around here. But you got to let the market do the work for you versus you just kind of assuming that that's what's going to happen. I think that's what we need to do. Because like I look at currencies like here's the dollar yen, for example.
I was just going to ask you what you thought here. Go ahead.
Yeah, well, the dollar yen. I mean, we've got this little, and this is a very minor triangle, but the dollar yen is not rallying with risk, which is a problem. I mean, if you're buying dollar yen and you're sitting there going, well, why isn't the dollar yen going higher? I mean, it's a little bit of a problem at this point because it's not rallying with stocks. You got like the New Zealand yen, which frankly I wouldn't mind shorting, but because you can see how we're just knocking our head up against resistance here. Yeah. We have current account out of New Zealand later today. We have GDP numbers out of New Zealand tomorrow, so I don't really want to make a move and start shorting the New Zealand yen right at this moment. But I will also point out that I think that a move lower in risk, if that should manifest, I want to look at potentially taking a short in the New Zealand yen. I haven't pulled the trigger yet, but that's something that I would consider doing. But
thank you, bro.
Huh?
Thank you.
Oh, you're welcome. But it's just waiting for the market to show its colors. And right now the market is just bullish. I mean, now I was also noticing you got the Nasdaq. The Nasdaq continues to stretch its legs higher. We're past the 78% retracement. Look at the Nasdaq continues to blast higher. The Dow is struggling a little bit. You can pin a couple of names on the reason why the Dow is not participating, but the Dow's underperforming just a little bit. That doesn't really mean anything at the moment right now, but the something to consider. And then I guess we should probably just take a real quick look at the Russell 2000, which is here's the IWM, so you can kind of see the Russell 2000 is a bit lagging to the S&P. So the smaller caps, mid caps, or some of these mid cap names are a little divergent as well. But overall, and Russell's up this morning, by the way, just so you know. I thought I had it up here, but I guess I don't. But let's take a look at a couple of the majors. So we have the euro dollar, and I don't want to take too much away from when Steve gets here. We have the euro dollar that's knocking its head up against this downtrend line. We are up against resistance in the euro now. If I mean, from a risk reward perspective, taking a short in the euro dollar makes sense right now. However, in this low volatility environment, I'm not keen on it just yet. And you notice, like, the last few sessions, we rally into the morning, okay, then we slump in the afternoon, rally into the morning, slump into the afternoon, rally into the morning, slump into the afternoon. We're rallying into the morning here in New York. Would this be a decent place to be short, especially ahead of short ahead of the FOMC tomorrow? Possibly, but you remember the market is also expecting a dovish FOMC, so you got a little bit of a risk of trying to short up here with the FOMC happening tomorrow. However, it is from a risk reward standpoint, it does make sense to be on the short side of the euro right now. I'm not doing it. I'm just pointing that out. You got the cable. The cable, it doesn't look like. And matter of fact, I want to bring on Stelios really quick if he's here. Stel, you here?
Good morning. I am here.
Good morning. So I didn't know you were under the weather. So it sounded like you were a little under the weather.
Yeah, no, I'm fine now. Don't worry. It's just one of those days. But yeah, not as much under the weather as UK politicians, I guess.
Yeah,
So
I was
you
going to
heard
say.
what,
So what's happening there with the UK? It doesn't look like we're getting another meaningful vote today.
No, it doesn't, because the speaker, John Bercow, who I gather is now a celebrity outside of the UK because of the way he speaks and all that. He's quite a character, actually. He said that he invoked a ruling which I think dates back to the 1600s, which said that you cannot bring something to Parliament for a vote if it hasn't been changed. And he ruled that it has not been changed. So he said, that unless there's something meaningful in terms of a difference from the different vote, he cannot accept it. So that's the status now. From what I read now, Prime Minister May is going to speak, or her or maybe her delegate is going to speak to people from the EU ahead of the summit on Thursday to try and do something. I mean, I really don't know what they're going to do, but at the moment, the most likely scenario looks like they're going to go for an extension, or they're going to try and go for an extension, which requires a unanimous vote on all 27 countries from the EU, and it's still not a given. The market seems to think that it's a given, but it's definitely not a given. I personally think it's probably going to happen, but it's not a done deal. So that's the state of it right now.
Well, that's a bummer for those of us that were waiting for some sort of volatility to hit the market, and it doesn't look like we're going to get that right now. So, So anyway, I guess it's more of wait to see what to do with the cable. But the cable, spikes above 133 have been sold today. We're not finding any type of real activity here, at least in the pound for right now. So
yep, that's true. And the other thing which we were discussing in the chat room today is that the bookmakers have a no deal Brexit at 1-6, I think, which is quite a low probability. Again, UK bookmakers are probably skewed to have this probability probably lower than it should be. It's they're probably going to be hedging themselves. But anyway, bookmakers give you a rough idea of what the market is pricing, and it's 1-6 for a no deal Brexit, and it's 6-1 on for an extension. So
got it.
That shows you, yeah.
All right. Well, Steve, it looks like Steve's not going to be in today. I'm gonna pass it back over to you, Coach, really quick, and then Grega's coming in to fill in. So that's great.
Oh, okay. Yeah, it is great.
All right. Well, hey, yeah, the Wizard of Waves is coming your way. So I'm going to pass it back over to you guys. Hey, have a great day, and thanks everybody.
You too, Blake.
Thank you. Actually, Coach, I can take the screen for a minute if that's okay with you, just to
go ahead.
Sure. Let me take it just to talk about oil for a second. Let's go. That's me.
You want me to? You got it. Okay.
No, I got it.
All right, bud.
So, can you see my screen?
Got it.
Okay. So, oil is making headlines again. People are talking about it because it's been on a rally since the beginning of the year.
Yeah.
I just want to, just quickly give my opinion on oil. I look at oil more in the long term. I don't look at small moves here and there like Blake and Steve do. But for me, from what you can see from this chart here, with the exception of this little brutal sell-off in late 15, early 2016, but then just came right back. Oil has been trading within this range of which is what, $40, $45 to $75, and the mechanics of oil are actually quite interesting because supply changes a lot. It's not like gold and silver or other commodities. Okay, other commodities will change as well, but the supply is so controlled by OPEC and by shale oil producers and all that. So the mechanics change from 1 week to the next. So what my view on oil is that it will continue to trade within this range, simply because if it gets close to, let's say, the upper end, $70, $75, then the shale oil producers, they become more profitable because remember, they have a higher extraction cost, all-in cost than Saudi or Venezuela. They become more profitable, more supply comes in, and then that's an automatic more supply comes in, that will bring the price lower. And also, all the other producers, like the OPEC producers, what do? They start hedging their future production. When oil spot goes high, they start hedging it. So they want to lock in profits because they know what their costs are. They're afraid probably that there might be another leg lower, so they start hedging. So then they also become a little bit less incentivized to keep prices high. So that happens at the high end of the scale. Then when we get to the low end of the scale, like $40-45, then shale oil producers become marginally profitable, if that at all. And
OPEC cuts production, or at least talks like they are.
Exactly, and this is what's happening now. And next month's OPEC meeting has been cancelled, and they have pledged to keep cuts at, I think, 1.2 million barrels, I think, or something like that. But anyway, they will remain with the cuts that they have pledged to do, which are considerable. So you see oil rallying a little bit. It's still in the middle of this broad, very broad range, admittedly, but it's still there. So as I start to get interested in oil when it gets close to one of those two extremes. And remember, it was 2017, right? I think that we're talking about on the webinar, it was in the mid 40s, and I said, no, I think it's going to go up to maybe $70 before year end, and or was it 60? I said 60, yeah, and it reached there. It's just, it gets to these pressure areas where things start moving and things start happening, and that's why I think we get these reactions. And if you look at this zone here near $45, it's been acting there, quite strongly all these times for the last 4 years. So that's my broad view on oil. Unfortunately, at the moment, I'm completely neutral, and I have been, because I don't look at the $2, $3, $5. I look at the big picture, and for me, right here, we're kind of in no man's land. So that's something I wanted to mention about oil.
Some great fundamentals on oil, and Greg is going to be with us, and I remember towards year end, Greg putting out his analysis on oil and talked about how many Januaries in a row we had crude rally. And that was a very prescient call by Greg Horvat down there when we were trading in under $45. So it's going to be great to hear Greg, and maybe he'll give us an update on what he's seen up here after this rally. So I don't think he's in the house yet, but your view on go ahead, buddy.
No. I was saying, okay. So my view on, what would you like me to have a look at?
I know you probably talked to Blake about pound, because I know you're long-term bullish crude, at least constructive. At neutral to bullish, and bullish cable. What would change your long-term view in cable? Is there a price? Is it a fundamental event? What would shift it for you?
My view will change as long as I am short and bearish euro sterling, but on cable,
right.
Because the dollar is not directly linked to the euro to sterling as the euro is, because UK is still part of the European Union, at least for now. That it will change when we firmly avoid a no-deal Brexit.
Okay.
Because I think that's the one scenario where the pound will get hit. I don't think in the medium term it's going to be a huge issue like 5-10 years from now. I think it's going to be the UK is probably going to be doing okay, but in the near term, the next year or two after an no-deal Brexit, if it happens, I think that's going to be pretty bad for the pound.
Because I sent you Jim's letter yesterday, and normally he's talking about euro and Dixie, and he's very bullish a pound. And when I take note when Jim Walsh has a currency idea, it's a decent hit rate, and he's looking for a huge move to the upside. If and when we break out, I guess the area is going to be like 54. Hi, Greg.
Hey, Greg. Hi.
Hey, how are you?
How you doing, buddy?
I don't remember when I was last time in a face webinar, actually. It must have been 3 weeks back or so.
Since you've been here?
Yeah, I think.
Oh, well, you're way overdue, but you're flying across oceans, and driving around with Steve Volge and you know, at 150 miles or kilometers a mile an hour. So
and
great
drinking
to
beer.
have you. Great to have you here, buddy. So we've been discussing crude. Maybe you could start there.
I'm going to pass the screen to you, Gregor.
Okay.
There you go. I just passed it on to you.
And I'll pump you the way Steve normally does, Gregor, you know, for things that he wants to know.
So it means you will talk a lot as well.
All right. Yeah, we're about even on that. So okay, so great to have you here. Thanks for coming in, buddy. And great job at the expo.
Yeah, thanks, man. I mean, this Real Vision TV was really a new experience for all of us, I believe, and we definitely have to continue in this way. So, firstly, as you mentioned, crude oil. Now, crude oil has been very bullish, as you know, since start of the year. I've been anticipating this corrective recovery, which actually can extend much higher. I'm tracking actually 2 wave counts, but somehow I think that this risk-on environment will stay here. Maybe even S&P 500 could just move straight up towards new all-time highs. So I think that in this phase, just crude oil could also see more upside. However, there is important resistance of 61.8% that comes in at this former swing lows around 64, 63 area. So that's why I also like this trade idea that we highlighted on the Real Vision TV, where we went dollar Mexican peso on the short side. So actually what I was looking for is to fill this gap, because dollar Mexican peso made a very nice move to the upside, very nice bounce, but crude oil was still bullish. So I thought, because everything was in a risk-on environment, I thought, okay, sooner or later, dollar Mexican peso really need to slow down, and this gap really has to be filled because it was quite a strong divergence. Okay, so and it looks like that in this week, as you can see, dollar Mexican peso is moving sharply to the downside, and I really think that it's trying to catch what the oil is doing, or since start of the year. So if I just update you on this dollar Mexican peso, as you know, in Real Vision TV, what we highlighted with Steve is that this corrective recovery from the lows is most likely completed after we have seen this nice sell-off into the middle of this triangle. So for me, this was enough. Okay, I have seen enough confirmation that market really has probably made a completed 4th wave and that we are headed to the downside. So it looks like that now a 5-wave fall is unfolding, and like Steve suggested, maybe we are even underway towards this triangle line. Okay, I have my levels a little bit lower, but this triangle line and this swing here at 1840 is definitely looking very attractive, especially after this week's sell-off. Okay, and I see a lot of other commodity currencies also moving into the same wave. Actually,
that includes Aussie and Kiwi, buddy.
Yes, I mean, if we take a look on dollar CAD,
okay.
I mean, here, what is very clear to me is that this recent bounce, okay, clearly was made by 3 waves. Again, we stopped at 61.8%, and so far we are turning down very nicely. Already fell below this previous swing high, which means that this support should hold if you think we are going higher. But obviously that's not the case, and the shorter term structure actually suggests that this is a 5-wave fall. So in that case, I just think that this whole corrective recovery could actually be fully retraced. And if that's the case, then you know that crude oil could actually really move through this $60 per barrel very easily, especially if stocks maybe will also just stay in uptrend.
So I remember, Greg, your great call at the end of the year for this rally in crude. Back then, have your expectations changed? Because you sent me a great tweet when I was talking about the potential for 1250 gold, and you said, Dale, we'll take it one step at a time. So when you were bullish crude, you're talking about, every January, I believe, Greg, you said there was something like a 10 or 11% advance. You went back several years to make your case, and we've had more than that, haven't we, from the January low?
Yes. Actually, I was looking for a move, if I remember correctly, back to 56, 58 area.
Yeah.
But since I actually didn't expect that stocks will move so aggressively higher like they are moving at the moment. So that's probably the reason why crude oil is doing something very similar. So regarding the wave structure, the longer term, nothing has changed really. But we definitely have to consider that if at some point we will see stocks hitting a resistance and maybe selling off, I really think that this crude oil could be falling much more sharper than stocks, because this decline, was very aggressive, and if this is just a temporary pullback towards 64, maybe when crude oil will move towards 64, S&P 500 could already be very close to its all-time highs if we continue higher with the current rhythm, right? So I just
100 points away in the S&Ps, or 95 handles. Yeah.
Yes, and with current ranges from the last few months, I really would not be surprised if we just continue to see this, to continue to see higher prices and retest those highs. But at the same time, I don't think that crude oil will manage to reach these highs from 2018. So I really would be aware what would happen here at the decision point at around 64. And if we're starting to roll over from a new highs on the S&P 500, then crude oil could be actually very interesting for this drop into wave C. So on a longer term scale, I still think that crude oil is in a downtrend, and that this is just a temporary rise.
Nice look. There's a lot of debate right now. I was wondering, the euro is approaching, not far away from 114, and the Dixie approaching 96 again. Are we about to change the picture if euro, say, starts closing back over 114? Would that change the picture for you?
Actually, no. If you recall, I was looking for this wavefront for some time. I've been looking and anticipating a break below summer levels from 2018 to clear all the stops out, and then market will turn to the upside. And why I was looking for this is that euro was in a very big range for 6 months, if not more, actually still a range. So these are very important levels, summer lows, and this is also very important high, January, actually 2019 high. So as soon as those levels are broken, I'm sure there are a lot of orders, either stop orders or at the lows where we probably have seen a lot of sell stop orders, right? So what market do, the flows at these important levels will change. So I'm not surprised to see actually also a change in trend. And that's why we are probably beginning to see a quite aggressive turn to the upside, because it was not so crowded. It's not crowded trade to the bullish side of the year. Probably
DSI's been in the 20s for weeks and still hasn't, sentiment hasn't really improved that much, even with the rally from the lows, Greg. So great point. So a lot of people still bullish the dollar, wrong-footed here. That could also be fuel for this advance that you're talking about, correct?
Yes, exactly. So everyone expected, okay, it's a 6-month range, euro dollar broke 2018 lows, we are going lower. No, we are not. And actually, this was, from my point of view, it was evident already earlier, because the price action itself was very choppy, very slow. It made a new swing lows, but still it was not aggressive. Look, this was an aggressive fall. If we take a look in 12 months back in April of 2018, well, this is much slower price action, but we are much lower. So I'm thinking that momentum is actually turning to the other side, and that actually bulls could take us much higher. If we take a look at the 4-hour chart here, what I see here is an ending diagonal. We have a very nice bounce, and on the right side you can also see a 5-wave structure which actually suggests that we may have seen a reversal here, a bottom. So my idea is to wait this pullback. Either this will be a wave B. Let's just assume that we continue to remain this in a very big consolidation, or maybe it's going to be wave 2. But in either case, I think that 3 waves to the upside will occur here, and that actually this could be opportunity on a pullback. So I'm watching this one very, very closely.
Okay, great look. Any view on what's happening with yields and the yen,
Yes.
Grega?
Yes, actually, just a second.
God, it's fun to be Steve Bolge when you're on the air.
So actually, I put this chart together in the morning, and what I noticed, actually, I was expecting, like everyone did probably, on the S&P 500, there will be a pullback. There will be a pullback. Yeah. But normally, when market turns so aggressively from that lows in December, January, actually, no one gets a chance to get in. There are no real pullbacks. So I would not be surprised if this move would just continue to new all-time highs. So I was looking at this yields chart, okay? And what I'm seeing here is that we have 5-wave fall, and now we can be in consolidation, ABC. What I like the most about this chart is that this recent decline, okay, is looking like a wedge. It could be finishing. So if that's the case,
again, an ending diagonal like the euro.
Yes, possibly.
Have you ever noticed, Grega, that when one formation shows up in an instrument, that all of a sudden a lot of different instruments start to exemplify that formation as well? Like you showed that ending diagonal and euro, and now we're looking at, you know, a completely different instrument and potential ending diagonal.
Yes, maybe there are some patterns, like you said, with a delay because markets are not topping or bottoming in the same day, but definitely, yes.
Okay, interesting.
Observing this. So what I'm trying to say here is that notice that yields are lower, but if this wedge is going to be a right call, if we are going to see a break to the upside for wave C, then S&P 500, which is already trading higher, could just accelerate to the upside. Notice that each time when yields rallied, okay, the S&P 500
rallied too.
Risk on. But when yields were falling, let's say here at the start of January, the S&P 500 did not fall. So, in my opinion, if the yields are going to see a reversal here to the upside, this S&P 500 could get just even more momentum and could be back at these all-time highs very quickly.
Okay, so it looks like you're allowing for a little lower in yields here, maybe over the next several days, and perhaps a pullback in the S&Ps to 2,700, yields bottom, and the S&Ps go parabolic to new highs.
Yes, the reason why I'm expecting, maybe I'm not expecting, I will say that I'm prepared on potential new spike lower here on yields is because, as you know, tomorrow we have the FOMC, so maybe market will want to clear out some stops before we find the real direction. But as I said, what's the most important? The S&P 500 is bullish, yields not. But always when the yields rallied, the S&P 500 rallied too. So in my opinion, if we see a break higher here from this wedge, S&P 500 could accelerate. On the other side of this intermarket analysis, we should look at gold. Gold could be here making this small flag. Maybe it's
so that's going to be interesting. We could have a weaker dollar with a stronger euro, and gold still can roll over after this bounce and trade back down towards 1260.
Yeah, but we have to be careful. I mean, on gold, I'm still not sure. We are in the middle of a very big range, as you see, as you know, that triangle. That's why I said to you that last time on Twitter that 1250, that's the area right there, could be seen. Okay, but either if this will be wave C, just a temporary pullback, or can unfold as a wave 3, we don't know that. I want to go step by step, but based on a short-term basis, clearly this looks corrective to me. And based on these intermarket relationships that I see with the yields, I just have to consider what.
Okay, so there you go. So higher yields won't affect currencies as much as it will affect the opportunity cost in gold.
Yes.
Because then probably the bunds yields are going to start heading up as well. Is that so? It keeps it in line with U.S. yields going up. Is that the case? And then if this is the case for yields to start turning up again, it makes me think that there could be a buying opportunity in U.S. dollar yen. Is that what your work's showing? You know, maybe around 109.5 or so, something like that.
Yes, I really want to show you dollar yen. I mean, dollar yen. Okay, here's the chart. Okay, so on dollar yen, what I'm tracking is a pullback. And notice here on the 4-hour, we have another chart. Okay.
Yeah.
However, is a 5-wave rise from those January close. And now I'm tracking a 3-wave decline. So if yield really will start to breaking to the upside, I think that yourself could be opportunity on dollar yen or on other yen crosses. It depends how euro dollar will unfold at the time, because let's not forget that euro dollar is also now showing the bullish structure. But before I may start buying maybe some crosses, the most important for me is to track dollar yen, because this one maybe can impact others. So what I see here is maybe this wave A, wave B pullback, and expecting wave C. Now wave C has this support, potential support at this former wave 4, which can be even labeled as a triangle here around 110.70. But then I have also another support a little bit lower, which is around 110. So it will be very interesting what will going on down there. But definitely, I think that downside could be then limited if yields will also starting to bottoming. At the same time, I want to look at Aussie yen. Okay, because sometimes even like now the S&P 500 can move to the upside, and dollar yen maybe is not following that path so much. So sometimes there are crosses, other yen crosses, because of maybe the majors against the US dollar are much stronger, are better opportunity on other yen crosses. So that's why I'm also keeping an eye on Aussie yen. And on Aussie yen, actually, we could be here in a triangle formation, and wave E could maybe unfold at the same time when dollar yen could also make this pullback for a wave C. Okay, and that would be actually very nice influence of that wave. Actually, we get the wave E here to complete the triangle. Then we get wave C to complete that 3-wave decline from the highs as well.
Okay, you have an update on Aussie since we covered yen, so see how they all come together. I know that several months ago you were negative.
Yeah. I'm tracking actually 2 counts on Aussie.
All right.
Okay. First one is actually that this is a complex correction. Actually, it can be already finished. But why I'm skeptical about this Aussie at the moment is because of gold. Okay, another reason. I mean, if gold is really going to see limited upside, this could actually just continue sideways. And also, we have only 3 waves up so far, and we still didn't manage to break this upper trend line. So I'm just wondering if maybe this should be the right counter track, where I'm looking for an ending diagonal here down into to another low, let's say, to test March lows, and then we see them to the upside. Actually, that would be, I would be more interested to look for opportunities after this move lower. Okay, that.
And what do you have about 69, 60, right around there?
60, 69, 70, around there.
All right, great look, man. Great look. So you go from here. What you've answered most of my questions. I could go to the crowd. Any questions?
I will also copper.
Oh yeah. Steve showed your count yesterday, so you're looking for one more surge and then a big sell-off in copper.
Yes, I mean it will be big decision point. As you know, wave B can retrace 6 to 61, maybe even 78.6%. But what is important is that even if I ignore, I will delete this to give you a perspective. Even if we ignore what is going on, what was going on earlier, we still should see at least 3 waves of a pullback from a new high. Okay, minimum 3 waves.
Yeah, right.
The only question will be if this will 3-wave drop will later become maybe a 5-wave drop, or will be just a pullback with an uptrend. I'm very flexible about the markets. As you know, I always try to look for trades maybe for the next, let's say, for the next week or two. I don't want to predict too far into the future because I know that market conditions can change. So definitely I have to be open-minded and not be just too confident.
And I notice you really like trades and counts, that whether the market overall longer term is bullish or bearish, that a correction at the minimum sets up whether or not it's going to be a much larger degree move. You have both the short-term correction and the possibility of a long-term move lining up together. So either way, it's just a matter of magnitude what you're going to get. But this is a
exactly.
example
because
of
for me, if I trade wave C, and then I have much better risk reward perspective, to focus on minimum target and make still a good risk reward trade. That's very important. But if this wave C becomes wave 3, then you know that the reward is just expanding.
Okay.
So regarding copper here, I really think, like you mentioned with Steve, that this was probably wave 4. This wave 4 swing low, if I zoom this in, are still in place from last week that we talked about. And I really think that this wave 4 will send prices higher, maybe after small consolidation here, like a triangle. Okay, or maybe we just continue straight up into wave 5. But I really think that this swing high from February will be.
So classic, one more thrust out of a wave 4 triangle to terminate the move.
Yes, exactly.
All right, I see. I've learned some things from you. Okay, buddy. So,
You know a lot of things, a lot of stuff.
Well, I listen to a lot of smart people like you.
We are learning from you as well. So.
Thank you, buddy. So how about an update with, I know you do follow the cryptos. Looks like Bitcoin's trying to break out here. Do you have a view on it?
Let me just take a look.
And I'm wondering, I showed the weeklies of the majors in crypto, Grega, and I showed Litecoin, Ethereum, and Bitcoin. And the strongest weekly structure to me looks like Litecoin. But I'm wondering what you're seeing here. Okay, possible C. All right.
Yes, I still think that we can retest these highs from December. I mean, the first move up, as you can see, was very strong. Then we have slow price, a slow pullback. So I think that this equality level is still a very reasonable target to the upside. Also, this equality level for, let's assume this is wave C, it comes in right into this previous wave 4.
Okay.
So that's quite strong level actually. And a lot of questions will be answered probably out there. So in my opinion, I still think that Bitcoin could see some more upside from here, or maybe after a smaller pullback, but definitely as long as we are above this swing low of February.
If we start closing above there, does the picture change and it's not a C, that it will probably be a 3 that we're in?
Yes, it will depend on how aggressively we will move towards this level. Okay, so it depends on the personality of the move actually.
Okay.
But wave 3, as you know, can make 161.8% or even more extension of a wave 1 measured from wave 2 low. So if we're starting to see, let's say, 5,000, then maybe we could be could be going much higher. But it's crypto world, it's very sensitive. I mean, step by step.
Yeah. Okay. So we have time for another 1 or 2, or if you're done, that's fine. Our guest is here. So anything you want to talk about, or if this is what you wanted to communicate to us today, that's fine too, Grega. Your call.
Yeah, I mean, it's okay. Everything what I had on my list, I want
Okay.
to. Okay.
All right, buddy. Well, thank you so much, Grega. I tell you, you enlightened me and crystallized some things for me. That's the purpose of this webinar, and you never fail us. Every time you come in, you put together the jigsaw puzzle in Elliott wave form better than anyone I know. So, thank you so much for dropping in today, and really, I'm so happy that you're representing Elliott Wave for us here at ForexAnalytix, because it gives all of our subscribers an edge, and myself included, buddy.
Thank you.
All right, Grega Horvat, everybody. Thank you, Grega. Good hunting the rest of the week, and I'm going to go to you now, Michael. Really been looking forward to this interview, so I'm now going to make you the presenter. Looking forward to having a conversation with you, Michael.
Dale, before Michael starts, I just want to answer a question from our friend Scott, who said he just joined, missed most of the webinar. There is a way to watch it from the beginning. We publish it on our website, on the free webinars page, and on our YouTube channel. So if you just follow ForexAnalytix on Twitter, the link will be posted there.
Oh yeah, always at our YouTube page. Okay, yep. So all right, thank you, Stella. I had the question box not pulled all the way down, so thank you so much. And Michael, welcome to FACE. Very nice to meet you.
Nice to meet you as well. Can you hear me?
Can hear you loud and clear. Okay. So glad you could make it here, buddy. And so looks like you've put together something. Your Twitter handle is Michael's Trading Journal. So, I'm always interested in how people get from point A to point B. What led you into the markets, Michael? What were you doing before then? And tell us a little bit about the beginning of your journey and how you got from point A to point B.
Sure. So the beginning of my journey, I think, started like how I've read a lot of traders started, which is I was dumb money. I kind of came in at the tail end of the bull market in crypto. I didn't know anything about trading, but I had actually had bought some Bitcoin back when it was like 87 a long time ago, and I didn't keep track of it. And lost a lot of money. I was going through a tough time personally and just was kind of throwing money at it. Didn't know anything about trading or anything about basically all the scams that run on Twitter, anything like that.
Okay.
And sometime around April, I just decided, well, this doesn't make sense. And I also did that thing that a lot of people do. I work with I work in healthcare, and I see doctors sometimes think, because they're intelligent, they've had success in one career, that it'll translate, and you go into the markets and you just get rinsed. And I decided that I would learn how to do this for real. And I just started learning how to do technical analysis and actually understand what I'm doing. And from that point on, I basically have had two careers: a full-time career in healthcare and then a full-time career learning how to trade.
Okay, so that is that you need about 48 hours a day to do that. So, so this this is kind of a recent experience, your foray into trading. Did you find anyone that influenced you, or mentors or books that turned you in the direction you're currently going, or are you completely self-taught?
No, definitely not completely self-taught. So my background is I've been into, been practicing yoga and meditation and reading about psychology and kind of subconscious persuasion for many years. And I've actually found a lot of traders come to those same concepts from trading, because you realize you have to be in touch with yourself in order to trade. And I kind of came from it the other way. I found trading as a discipline to further those skills. And so one of the first books was Trading in the Zone. I realized.
I was going to guess that one by Mark Douglas.
Yeah.
Okay.
And I was like, oh, this guy actually, this is the same stuff I've been doing for years, but applied to trading. In terms of technical analysis, one of the first people that really I thought, oh, this person's actually legitimate, is Trader SZ, who I know you've had on.
Oh yeah, sure, Saeed.
Yeah. He really blew my mind. And then in terms of kind of supply and demand and getting an understanding that there is a way to look at the markets and actually have a viewpoint and a point of view and a bias. I think you've had him on as well, Mr. TA. He really the guy that showed me, although I don't like copy anybody's style, he showed me fundamentally how it is to be in the market and be neutral in the market and have a particular point of view. And that really shot forward my trading skills.
Well, you know, that's a great testimonial. Of course, you need discernment on Twitter, but both of those resources, I believe, you probably found on Twitter, correct?
Absolutely, yeah.
All right, so you know, it's a combination of both. You know, you have you know, people showing you that they're getting into their Ferraris, that drive them to their private jet and fly them to exotic places because they're wizards of the market. And you really do have some authentic people that want to pay it forward and help you. So great story, Michael. And this is a very interesting slide that you have in the PowerPoint. So why don't you just take it away and tell us what the meaning of this is, and what's the definition? It means a reason for being, Ikaji. Okay.
Oh, you're just seeing. So are you not seeing my my Bitcoin chart?
Oh,
there?
okay. Yeah, before we were seeing like some type of model. Okay, so here's Bitcoin, but we were seeing some type of model of psychological profile, a reason for being. I'm still trying to figure it out what my reason is. Do you know your reason for being, Michael?
I don't know my reason for being, but I know that I know the path to understanding, I would guess. And I feel that I don't actually know how it's pronounced. It's a Japanese word. I always pronounce it ikigai.
Okay.
But it's basically, it's the confluence of having a mission, a vocation, a profession, and a passion. And
okay.
Those
well,
four
then I do. Because
right.
my mission, at least professionally, is to build up and edify traders every day. That's my mission statement. That's why I bring people like you in here, so that people can learn through others' experiences and views. So, all right, let's go right to the beast and tell us what you're seeing here at 3964.
All right. So I thought what might be interesting is just kind of how I get to a bias on a chart just from scratch.
Okay.
Unfortunately, I don't know how to get it to show on my big monitor, so I'm just gonna try to make it work on this on my little one here. So one of the things I learned from Mr. TA is a pretty basic concept. Even when I'm not using his technique, the first question always is, where are you coming from and where are you going? So here on, and also Bitcoin really, a lot of people say it's it's kind of crazy and it doesn't follow any rules, but I actually find it very logical if you just use a little bit of discernment. So starting on the weekly chart, where are we coming from? Here I'm on BitMEX, of course, and it's the granddaddy. So I just start with, here's resistance, it got rejected, here's support, and it's not a trend line, but it's an SR line. It's just on a diagonal. And then I'm just gonna say, what if that same week was important, and just take that same angle chart and go right here. And now this is where were we coming from? We're coming from here, we followed this, and now where are we going? And if we go right to the end here,
look at that.
Certainly seems to give us an answer here and a perspective. And you can see how well this has been respected. And then if you go down to the daily, this is really what I've been looking at lately. And it's just, it has not failed these lines for me right now, just as a starting point. Even if you look right here, as we go along the line.
Yeah. You know, what's interesting about these lines is you drew them before the parabolic move to the upside, and then after an 80% decline in value, here they are. It kind of proves, I've been taught by traders, always look left. The market has a memory, and interesting how it has a memory from its fall from grace at 18,000 to lines that you drew before it got there that are now coming into play down here. I find that just amazing.
Absolutely. And then if you see so if the bottom trend line here, I mean, this can't be denied. it's going to come here and it's going to shoot up at the end. So in my opinion, above this blue line, we're at the start of the bull market. In here, we're figuring out what we're doing and we're ranging. And below here, we're in Armageddon. And if you just went right here, here's the candle that broke above that line. Here's your risk. It's not the greatest risk reward, but if you went long here with your risk below here, these big spikes that are chewing people up on Twitter, they don't touch you. You're just using basic discernment. There's your risk, and you're long. So in my opinion, as long as we're above that line, we're at the start of the bull market.
Do you use stops on BitMEX, and do they ream you on the stops, or are fills at least somewhat adequate on stops?
I have not had one of those instances that people talk about where it ran through the stop and it said, you know, chart cannot respond and all that stuff. Okay. I found if you I don't trade small time frames on BTC for just that reason. Okay. And I found if you have a logical place for where you're setting your stops, that it tends to work out well on BitMEX.
Okay. All right. Well, that's good information. So that's mainly where you trade crypto.
Yeah, because I don't I'm not a big alt hunter. I mostly trade Forex. I just thought it'd be interesting to take a look at Bitcoin because it has this reputation of being so unmanageable, but I actually find that it actually has pretty logical price action if you take a step back in a broader view.
Okay. Yeah, I mean, a chart is a chart is a chart. What I've noticed is that you have long periods of nothing or consolidation or accumulation, distribution, and then you have these big candles every once in a while. But that's not unusual for any market to do that, to consolidate, distribute, accumulate, and then have a big move happen one way or the other. So, you know, a chart is a chart is a chart to me, Michael. The only difference is the title, the beta, and the leverage that you use. Otherwise, you trade them all the same, don't you? I mean, the way you look at Bitcoin, isn't it the same way you'd look at Euro USD?
It's exactly the same way. Like here you have here I have a supply zone. Here I've got a trend line. So to me, this is a target. This is a place where I would be looking for some price action to go short on a pullback, but it's also where I'm expecting price to go to.
Okay. So I want to get to your Twitter handle, and it's, your trading journal. It's part of the title of your Twitter. So do you journal all your trades, and when did you, if you do, when did you start, and do you continue to do so?
I do. So I've got kind of a pretty dry, straight RR Excel spreadsheet that I do to track each of the trades. But what I started doing on Twitter when I had no followers, and I did not expect to get followers kind of early on in my trading journal, trading journey, it just happened, is I just decided when I realized that there was a lot of people that were fake and just scams, I decided I would just be honest about what I'm going through, where I'm at, and where I'm at in my progress, both my successes and failures. And I think on the internet, and I guess in life in general, there's a need or an interest in people that are just being authentic, whether you're
exactly.
And I've gotten a lot better. And so I think for newer traders, it's showing like if you have discipline, perseverance, and patience, you will improve on the way, and you will.
That's a secret. You know, everyone talks about the secret of trading. You just named the 3 qualities, so it's no secret. It's hard work, isn't it?
Yes, and it's training both your technical analysis, but that's really just the basic level. It's really your psychology. Looking at a win is the same as a loss with neutrality. Approaching the market with this, like I never trade without exercising, meditating, and prayer before I go in. And everybody has their own system. But if you're not in the right state of mind, how can you possibly be making the right decisions in a moment when money's on the line? I just don't think it's possible.
It's like being an athlete, isn't it? You have to be in a peak performance zone. So, if you're not there, your decision making isn't as good. I did notice when you announced you were going to be here, there were a lot of people on Twitter that were very excited to hear this interview. So, from what you said, from when you started and now, you have a following. So, you have an interesting mission, kind of similar to what I'm doing. You're just trying to help people. I don't see you have any axe to grind. You don't have any service to sell. Is that correct?
That's correct. I like you said, I'm still in my first year of trading, and I do get asked things about, like, do you have a paid group? And I try to explain to people, you wouldn't want to be in a paid group with someone who doesn't have the experience set. I would consider that once I'm a consistently profitable trader with years of a track record. But before that, I would be a fraud. And fortunately, I make enough money in my job, and I'm focused on making money in trading, that I don't have any kind of impulse to make money through being fraudulent. And I just feel, as a trader, if you're not honest with yourself, you can't succeed. And if you're not honest with other people, it's hard to be honest with yourself.
You know what? What an inspiration to people that are just getting started. That, here you are talking to a group of traders. You've been at it for a year. I don't like the term newbie. Never liked it. I think that what you are is a trader in training, and so you are trading live. Did you at first? Let me ask you about the leverage. I think some of the mistakes people make, the biggest one is over leveraging. Do you use leverage in your trading of Bitcoin? And if you do, what is the amount of leverage you use? 2 to 1, 3 to 1, 10 to 1?
I appreciate you asking that, because it's something that I come across with newer people on Twitter all the time. And sometimes they talk about these huge gains they had on a trade, and I said, you clearly risk too much. So the only reason I use, and with BitMix, the way they do it so differently than Forex, where you can choose your leverage in the time, I use leverage for position sizing and nothing else. It never changes how much I'm risking.
Interesting. Okay. So do you have any positions currently in Bitcoin? You can share that. If you said we're in bullish territory, as long as we're above these blue lines, do you have enough conviction to have skin in the game on Bitcoin at these levels? And I see a green X, which kind of lines up with, I tell you, a good area. And we just had, you were here, and you heard Greg Horvat. He's won all kinds of awards on FX Street for his research and his analysis. And looks like you have an area that's pretty similar to what he's looking for, 45, 4,700. Is that your target for a current position?
Yeah, so I'm not currently in a position. The last position I was in is I went short in this area and had a nice short, and I closed it out when I looked like things were coming back up. I'm actually focused almost entirely on Forex right now, and looking at Bitcoin just for fun. But because people on Twitter are so into it, I was decided to do up the chart. I'm really focused on building my own technique right now, and not doing as much trading as I was doing a month ago. Basically, I decided to spend a month hunkering down and really establishing my system and my process a bit more. So I'm currently flat in Bitcoin, other than I have some holdings from a while ago that I'm just holding for long term, but I'm definitely bullish right now.
Okay. Do you want to share your focus in FX? Is it mainly the majors, dollar against euro, euro USD, cable? What type of pairs do you trade? I tell people that are fairly new to kind of limit their how many pairs they cover, because Michael, I use the example of guys I knew from the CME that stayed in one pit, only traded one market, didn't have to be diversified, but knew one market like the back of their hand. So wondering what you focus on in FX.
So I think that's very good advice in general that I don't take personally. So I I look at a lot of different charts, largely because I spend so much of my time practicing and learning trading that I find, and I feel the first system I really learned deeply was supply and demand trading. And in that, it's basically if it moves, I can trade it. So right. I understand the people that with fundamental and technical analysis get so deeply into a few markets, or people who only trade gold. But I actually trade a wide range of charts, using those techniques. And now I'm adding in a few more techniques that I'm kind of working on, kind of expanding my arsenal.
Okay.
I think your advice is good to start. Absolutely. But
I think what you're doing is fine too, yeah. Because you're right. There are many pairs that when they become range bound, they're really not tradable. And the purpose of scanning a lot of different markets is to see where the opportunities are. And,
right.
you know, I'm just talking about for people that are fairly new, it's good to master a few and really get the feel for a few before you start. I don't know, to me, if I just have too many different positions on, I'm not as laser focused.
Yeah, I think that's true. I definitely chart more pairs than I'm trading at a time. But I'm always, you know, sometimes it can be 3 weeks until something's going to get to a level that is tradable, but I'm ready for it when it gets there. I like to be prepared and have a bias and have an idea of what I'm going to do when price gets there before, you know, long before it gets there.
Okay. All right. So, Michael, the best way, is there anything that you want to wrap it up with and maybe share the most important thing that you've learned in your first year of doing this with people that are watching us live and listen to the recording later? You want to share the most important thing that you've learned in a year?
Sure. Trading's really been changed my life in terms of the discipline that I've created in myself to do it. And one of the things I think about a lot is you can make and lose money, but you're never just doing one thing. You're also always living your life, and you can't make time or save time. You can only spend it. So whatever you're doing, instead of I think just focusing on the money like we're robots sells yourself short, because whatever you're spending your time doing, you're spending your life force. And so
I love it.
Get as good as you can at it so that you love it, because you become passionate about what you're skilled at. So there's no shortcut to it. You need to develop mastery. And as you develop mastery, the profitability comes as well.
I love that, because, you know, I ask people, what's your most valuable precious currency? And, you know, some will say, oh, it's gold, or, you know, it's $1. It's time, because money comes and goes. Time is gone forever. So making it count. What a great interview. Fantastic job you did today, Michael. We have some people asking for your Twitter handle. That's the best way and only way to get in touch with you and follow you, correct?
That's it, yeah.
Okay, so if you want to put your Twitter handle out there, Joey wants to know it, Mark wants to know it, so you're going to pick up some followers from being here today. Maybe they're at a similar juncture as you are in trading, and we learn from everybody. So why don't you give the audience your Twitter handle?
Okay, so it's Michael's Trading Journal, and or my Twitter handle is Crypto Michael T.
At Crypto Michael T. Thank you so much, Michael. You are my trading warrior brother now, like it or not. And if I could ever help you in any way, I think you did a great job. And I think you've broken through a barrier, and you now have a new paradigm. You're an excellent speaker. So always have the courage to share what you know, because I detect wisdom in your words and your demeanor. So glad to meet you. Glad our paths crossed. I thank Twitter for that. Good hunting, Michael, and we'll do this again and check up on your evolution as a trader down the road. Okay, buddy?
I appreciate it. Thank you very much for having me on.
Okay, everyone, that's Michael, and you can follow him at Crypto Michael T. And that's a wrap for Turnaround Tuesday. I guess the Fed's probably, talking about what kind of fabricated stories they're going to give us tomorrow. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow for the Fed or prior to the Fed. Good hunting. And thank you, everyone, for your attention. Adios. See you, Michael. Good hunting, my friend.
You too.